Well, hello, folks. Well, this is Shooter. Hey, I just finished a couple hours digging into a few things, and we had a lot of damage done today. So I want to address that. Of course, at the end of the presentation, please review our disclosures. All right, let me bring in the S&P 500 SPX futures, okay, and just what I see, okay. So unfortunately, this was not a good day to take the afternoon off. I would have loved to have caught that. So we need to back test to this 47.38 and get above that. The longer we stay below that figure, the more likely it is that we now develop a downtrend towards the gap fill. That's the most likely outcome, I believe, from the way that I see this looks. Now, and what I mean by significant damage, if it's going to even let me plop that in the right place, gap fill would be that 4421.76. Now I'm going to look at the minor wave. Just, I'm not looking at the larger wave because realize there's a much larger wave that's appearing on my account now, which was not there prior to that candle coming down. So now I noted in the S&P that we were hitting some resistance or overbought status in the SPY. And I thought we would chop around that flat and keep going. Now my opinion's changed. Now both doors are open, aka we could continue to the upside, or aka we could continue and start a new downtrend. Now, when I look at the daily, it's not as significant as the 90-minute. And this is going to take a couple of days to WAN, but the key thing that I see here, when I bring in my 20-day to my 250-day bands, they typically roll over. And let me just walk back in time so you can sort of get a visual. They tend to flow when we're in a downtrend. They basically come into this culmination of a top. So we've really been in this. This is like where we are right now. We're right here. So I think we either develop a flat, and I realize this is back in July before we had this drawdown into August. But coming back to today, that's a little more aggressive, the turn down. And we've made a mark all the way down to it would be the 280 or the 180 bands, which is very significant. I don't know that we can recover from that. Is just how I'm going to put that. So my marker in the sand is 50% back. We need to get above that 47.37. I'm going to say by Tuesday or Wednesday, because if we don't, I don't think we will by the end of the year. And what basically is happening here is that a lot of commercial traders are gone. They're already on vacation. They've taken their extra week. They won't be back till January 2nd. So a lot of these funds have already positioned themselves, sort of like I made a comment or a post on Goldman Sachs, how, they suggested that everybody take their profits for the year, and I posted that. Now, I think the most likelihood if we don't get to 50% back is that we continue lower. So let me sort of map that out just a little bit visually to give you an idea. That leg lower is probably going to be fairly aggressive. Let's just assume it's as aggressive as our last corrective leg, which is this ABC pattern. And I'm just going to slide this over here and say, maybe it's not as aggressive as the count, but we could end up in this prolonged downtrend well into February, and which takes us down to 4,200. So I think my thought here is if we do not get to 50% back by Friday's close, I would be insulating. And what I mean by that is take short-term January puts, maybe $20 out of the money on the SPY or the QQQs to insulate. The VIX is not even is not going to be helpful here if we do continue in this downtrend, or I would actually consider about trimming my positions. Now, the concern that I have here is because our breadth was so solid that it's going to flounder here as well. So I think the flat, let me jump over to my SPY chart and look at the daily here. So now, according to the SPY, it's buy the dip moment. According to the SPX, it's not. All right, that's always challenging when futures gives you one read and the ETFs give you another, but they're often a tell. And the reason I dig down into futures because the futures typically give you a tell before the ETFs do. So now let me jump down to a 90-minute on the NASDAQ, on the QQQs. Now, that currently suggests it's a buy the dip moment as well. And that's where I think the theme here is we either get 50% back. Let me draw that on there so you guys have it, because it's sort of a, when I'm thinking like this, it's a works in motion kind of thing, so just assume this was our low. So 50% back for me on the NASDAQ, really right about, ironically, probably right about this off number, almost dead smidgen at 406 on the off number, the close of that flush. So we need to get back above 406.65 on the NASDAQ. And now the SPY, it's really dead at that off number too. The two off numbers in play. The upside back in December, they really have a number 471 to that range, but there's basically a line right there in the sand. 471.63 is according to 50% back of this leg. Or I would be implementing some insulation, some protection, in some way. So I think tomorrow you guys need to decide what you own and really understand what you own, because obviously you've had some gains, and we've been in a number of our plays. We took out BX, which was a large swing that we had, had numbers on there yesterday, which was well timed, and I haven't gone to look at that yet. I was too focused on these futures and seeing what was going on in this. I wanted to give you guys a visual of this. But great trading, folks. Until next time, hopefully this has helped a little bit.